Well, it's hard to call. This is the nothing matters market. No matter what headlines hit, it seems like the markets now have resumed their upside momentum. Of course, yesterday and today with respect to technology has been a little bit different amid worries about government regulation. But, we have the possibility of the tariffs kicking in on China tonight after midnight. We have the possibility of the Fed raising rates given the strength of some of the economic numbers we've seen. And we've got the political overhang. None of it seems to be affecting the Dow, at least. And so I'm not quite sure. This is the first time, I would say, in the last many years that I simply don't understand what the stock market is trading off of, except to say that, the economy is strong and earnings are good, and that's just how it works.
Oh, and Michael, do you think that continues to be the narrative moving forward? You got a strong economy, you got a tight labor market, you got strong earnings here. Is that the thing that continues to push this market forward? Or when you have tariffs, more tariffs going in on Chinese imports tonight, you have all of this latest round of drama coming out of the White House. Are these things that are now risks to the market?
Well, I think the biggest drivers of the market's performance lately, historically, and probably going forward are going to be interest rates, how quickly, how much, inverted curve and any impact from there would be trade, the uncertainty regarding trade and the potential impact on the stronger, the strong dollar's taken everybody by surprise this year, I think, a little bit. And to the extent you have trade issues, you have a run to safety type of thing. That's also impacted the emerging markets and potentially in the long term impact U.S. growth through less exports. So that's an issue. And currently the strong fundamentals in the U.S. economy. I mean, unemployment's low. GDP is going fantastic. I mean, 2 years ago, we're talking about secular stagnation. Now we're talking about 3 to 4% GDP growth. The big question there would be, sustainability over the long term. And so there's reasons to be cautious, but there's also some fundamental reasons why things have been going up this year.
And Michael, you say that, and I'm looking at some notes here. It looks like you like gold and silver right now. We've seen both of those get hammered. Why do you like them?
They certainly have, and I think the strong dollar has a lot to do with it, and I think the fact that that strong dollar has impacted global growth a little bit. We're long-term believers in global growth, but there's no question it's hiccuped a little bit this year. It's gone slower than we thought, and the strong dollar and demand has impacted not only gold and silver, but commodity prices in general. And our view over the long term would be inflationary pressures caused by growth, growing global economy, supply-demand picks up, inflation pressures exist. And so from a long-term investment standpoint and valuation, they've been so beaten down, they haven't participated, that for diversification purposes, they make sense as a complement to a portfolio at this point.
And of course,
Ron, the market, as you point out, has kind of played past everything.
Yep.
And often it's the thing we don't expect that ends up tripping the market. What could that item be, the thing we don't expect?
Well, people are really downplaying the emerging market currency crisis, I think, which does have the contagion risk. I think people still haven't fully baked in the possibility of the Fed raising rates too far, too fast over the course of the next several months. And that's the thing that kills bull markets. I mean, we know that. And the economy could, in fact, be overheating. So if indeed it is doing that, the Fed will be more rather than less aggressive, unless the trade war breaks out in full and slows global growth. So I think those are the variables that really make the biggest difference to the market. And it doesn't seem like politics or even geopolitics are really playing any role in the behavior of markets.
Some of those
today
may be low probability but high impact if they happen. All right.
okay. Well,
Go ahead, Mike.
go ahead.
Tie it up.
No, I would agree with Ron's points. The only issue I would say in the political environment is that I think there is definitely more thinking going on with respect to tech and some of the FANGs and the potential changes in the business models by what's going on in D.C. And that is a long-term factor to keep in mind in that sector.